morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. Okay, traders, we're going to do a kind of quick video this evening. It's Sunday evening, and we're filming a video for Monday's trading, 7/13/09. Traders, I'd like to discuss two things with you in this video. There'll be a couple of quick charts, and I'm running out the door. One of them, the head and shoulders formation. We are mired within a head and shoulders formation right now. And in fact, we're in two of them. We're kind of in two head and shoulders formations. There's a huge inverted one developing. And then we're in an upright head and shoulders within the right shoulder of the developing upright head and shoulders, if you will. And I'll show you that on charts so that you can see what I'm talking about. And traders, when you are within a formation or just coming out of a formation, you have to have a consistent approach to your trading in order to capitalize on the move coming. Which brings us to the next thing we need to discuss here in this video. Employing a consistent, methodical approach to trading. Now, traders, we are basically, with this in mind, a methodical approach with consistency. We, at this point, being Monday or Sunday night into Monday, we are compelled to sell rallies in the S&P if we are to maintain a consistent, methodical approach. Why is that? Well, if we're in a head and shoulders formation, and that formation says the market should drop lower, well, then we need to be sellers of rallies almost every day until we either make the projection coming out of the head and shoulders, or we go the other way and violate the head of the head and shoulders and keep going, in which case then we begin to change posture. That gives you a consistent, methodical approach to the analysis and how to trade it. This is more important than figuring out if it's a head and shoulders or not, having a consistent approach to your trading style. So now, what I'm trying to get at is simply a head and shoulders upright formation produces a down move most of the times. Not every time, nothing's 100%, but most of the times that formation produces a down move. That means now that we have certainly established that there is the head and shoulders formation there, and we've come down out of it, we need to be selling rallies consistently without wavering until we get our down move. The only time we waver from this point forward is if we take off and violate the head of the head and shoulders. With that in mind, traders, I am now going to show that to you on a couple of graphs here so that you can see exactly what I'm talking about. Pay attention here, traders. It's not that difficult. It will show you something interesting, so let's go to the charts. Okay, traders, what we are looking at now is the S&P Cash Daily Bar Chart. And what I want you to do is sort of step back and look at this chart. Take a bird's eye view. We're not in the thick of the trees right now. We're going to look at the path of the forest. So take a look at this. What this really is turning out to be, or at least is forming to look like, is a huge developing inverted head and shoulders formation. These three green circles. Shoulder, inverted head, shoulder. A formation of this nature at some point should produce a higher move. So longer term, it looks like we could be putting in some kind of a bottom. We'll find out one day at a time. But just to give you some sort of a larger view, that's what this is here. But we're day traders, and we have to trade up close and see what's happening now to figure out how to get in and out, correctly or safely, if you will, while this market's developing. And as you can see clearly, there is a bearish upright head and shoulders right here within the developing right shoulder. We must respect what we see. Shoulder, head, shoulder, we have broken down out of it slightly. And at this point, we are compelled to sell the rallies because we're coming down out of a head and shoulders, and that is what you do when you expect a lower projection. I'm going to blow this up for you right now. What I'm going to do is show you another chart and just blow up this shoulder here. We'll take a closer look at it. Okay, traders, the very same chart, S&P Cash Daily Bar, but now we've zoomed in on that developing right shoulder. And as you can see, clearly no argument here. This is a head and shoulders formation that we have begun to break down out of, and likely will end up down here somewhere off the projection of that head and shoulders. Of course, we'll take one day at a time, but this is where we are. Shoulder, head, shoulder. And now we need to sell rallies, or as I said, we are compelled to sell the rallies as this begins to break down. The only way we would not sell rallies is if we get a few up days and they take the head out. If they go higher than the head, we become buyers of dips again. While we are breaking down from this formation, however, we are sellers of rallies, and that's what tomorrow's trade is at the Emini Trading Academy in the S&P. We are selling the rallies, and traders, when employing a consistent, methodical approach, you would be selling rallies every day now that we're coming down out of the head and shoulders until the projection area is hit. Then from there, maybe we'll take some longs. We'll see how it acts up. But for day traders, a consistent approach means you sell rallies for the next few days and see what we get. Now, traders, difficult analysis this evening. If you are a technical analyst, I'm sure you noticed the same things that I did. Doing analysis on Sunday for Monday's trading in S&P, S&P clearly was bearish, while the NASDAQ and the Russell had bullish indicators and a little bit better or stronger look to their charts. However, they are in sell of rally mode as well, and I'm going to show you a NASDAQ chart right now to illustrate that. Okay, traders, what you're looking at now is a NASDAQ daily bar chart, the September NASDAQ daily bar. And what this is right here is simply a bear flag. Here is your flagpole, represented by this long day here, and these couple of days you could call them as well. But here's your flagpole. Here is your flag. What should happen is we should fall out of this flag at some point and break down in the NASDAQ. But possibly the NASDAQ could rally up a little bit to the top of the flag. I don't know if that'll ever happen, but that's a possibility before a breakdown. But when you have a flag and it's bearish, the next step is a breakdown, and that is what I think you will see in the NASDAQ. So you need to be selling rallies in NASDAQ as well, and here is your reason why. Okay, traders, please pull your own charts, do your own homework, see if you can find these formations as I'm showing them to you. Compare your notes with mine and learn how to get this analysis right. So, traders, you see those charts? Now look, that huge inverted head and shoulders formation, that's all for the future, right? Just something to keep in mind. What we're working on as short-term traders is that head and shoulders formation, the little one I showed you in red, that we're breaking down out of right now. And traders, that's just what's beginning to happen. It looks like it's starting to break down out of that head and shoulders, and we will be consistent with our approach, and we will sell rallies until the direction changes. Traders, make sure you use the mentality. Again, this is more important than this. Finding the head and shoulders, great. How to approach a market, much more important. And if you would like to learn a lot of those rules that we use here at the Emini Trading Academy, simply come on down to www.livewithoscar.com, jump into the free chat rooms, come look at the trade recs on our site, and come to our classes, because we are here to help you become a better trader. If you want to look at within yourself and see if you need help trading, take a good look, do some soul searching, and if you think you do, come on down to our site, and we will do the best we can to help you out. All right, traders, that's about it. I'm out of here. Make sure you give me a buzz anytime day or night, 702-629-4755. Remember, a stop is your best friend. Never trade without stops. Always place your stop first before you get into the trade, and keep your emotions out of trading. One of the best things I can do with that is to help you, is to tell you to say this to yourselves every morning, every afternoon, every evening. And you know what that is? Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors.
This is how I've made my living for many, many years.